Hello and welcome to this video edition of the weekly video market update from Nuruddin Al in coordination with Orbex, a broker. As always, we will start today with a look at the main events of last week. In addition to that, we'll take a look again at the upcoming weekend as we do for the technical outlook and also some fundamentals. I'm just going to go overview again the next few minutes what we will do, beginning again as I said with a look at last week's main events, including also Donald Trump, which basically he was moving the markets absolutely right now, even more than the Federal Reserve has moved the market for the past few months. Even after the Federal Reserve raised rates, the market hasn't even moved as much as the market moved on the press conference from Mr. President-elect Donald Trump, which I believe that we will have most maybe interesting 4 years ahead of us in terms of trading, in terms of volatility, in terms of even politics and even the economic situation. In addition to that, also of course we're going to take a look at the previewing the upcoming economic releases for the week ahead, and finally we will take a look at some technical analysis for some of the products and some of the currencies that we took a look at for the past or in our past video. So looking first again, as I said last week, we had also another amazing not tweet, but we had an amazing press conference by the President-elect Donald Trump, which basically led to this kind of a candle in the DowJones Industrial Average. Unfortunately, so far the DowJones Industrial Average has been trying to break or to touch the 20,000 since November until today, but without any chance. And unfortunately, the Dow Jones was very close to reaching that level until Mr. Donald Trump, or Mr. President-elect Donald Trump, actually did not mention anything regarding the fiscal stimulus during his first press conference, and that was kind of a negative sign for the market not to talk about it. So we've seen some sort of that sell-off that we've seen all the way to 19,740s, and then bounce back again on Friday almost above the 19,000 and close above that level, which is still considered as a positive sign. But as I said before, the technical indicators doesn't even support any more up move, or at least a significant up move from here. But despite the fact, don't forget that we are in the earnings seasons right now, so this might be a push, or this might be a catalyst for another upside in the next few days. Also, I would like to have a look again at the U.S. figures or the U.S. figures that we've seen on Friday. Just hold on, I'm going to bring up this. On Friday, from the U.S., we had an amazing data also, or the mixed data especially. We're talking about the retail sales and also the core retail sales, PPI and core PPI. Most of these figures came in with a little bit of mixed data, but at the same time, what I want to mention here is that the data that came in did not even support the U.S. dollar index, and here I would like to highlight why. So looking at the retail sales here on Friday, retail sales came in also as short of expectation, 0.6%. It's not bad. It is still good. It's still the highest level also in almost 4 months. But despite that, the U.S. dollar failed to rally on these numbers, and this is because of one important thing: the core retail sales, which excludes basically the autos, is back to 0.3%, and this is the 4th monthly slowing down in a row. In addition, also to the excluding food and energy, both also continue to decline to almost, or it's not a decline, it's just a slowing down to 0.2% on a monthly basis. At the same time, the PPI for the year-over-year was just stable. 1.6 is still good compared to the previous one, but at the same time, it fall of a little bit of expectations, or the second monthly slowing down in a row by 0.3%. Those are the main key levels why the US dollar also failed to rally, because we had a 4 monthly slowing down in a row in terms of the retail sales. In addition to that, consumer sentiment from Michigan, University of Michigan consumer sentiment came in short of expectation, 98.1, but this is for the month of January, and this is the first or maybe the second consumer sentiment, and so far we haven't seen that large drop in the consumer sentiment index from the University of Michigan since the elections, which seems to be an encouraging sign for the next month at least. But business inventories, unfortunately, we've seen a large increase by 0.7, which is another bad sign for the sales. So these are the main things I would like to just to highlight about last week trading. And let's hop up directly to the upcoming week next week. The upcoming week we have many economic figures we'll be waiting for this week, starting on no, this is January, sorry. Yeah, starting on Monday. Monday will be a little bit of a very calm day actually, because there's a lack of fundamentals across the board. In addition to that, the U.S. banks will be closed in observance of the Martin Luther King Day. So therefore, I don't believe that or expect a very high volatility. So volatility should dry and liquidity should dry like during the day. In addition to that, but the most important thing that we'll be waiting for, late Bank of England Governor Carney will be due to speak at night, almost at 10:30 at night Abu Dhabi time, which basically he's due to deliver a speech titled "Policy Issues Affecting the Bank of England at London School of Economics," which might be kind of important, especially if he started mentioning the hard Brexit as well, because we have also on Tuesday we'll be waiting for a press conference, and a very important press conference by the Prime Minister Theresa May, which is not mentioned right now what time is going to be. But the thing is, she's due to speak about triggering Article 50, which is not going to be like any kind of a positive thing for the pound, at least, or even for FTSE. But the thing is, we have to watch also the figures that we'll be waiting from the UK retail sales price index. We're waiting for house price index, producer prices, and the producer prices, and the inflation data, consumer price index, which is very important for this week because we'll be waiting for a lot of inflation data this week. Whether it's from the UK or even from the European Union. But in addition to that, also the same day on Tuesday, ZEW from Germany, ZEW also from the Eurozone is very important to watch. Going forward, Wednesday, as I said, consumer price index from Germany, which is very important to watch because last month we had a huge drop in consumer price index for Germany, all the way up to the highest level in almost 3 years, which is important. Also, we have the jobs report from the UK. The inflation data of the European Union will be the most important to watch before the ECB decision on Thursday. The inflation is picking up in the UK, it's picking up in the Eurozone, it's picking up in the States, Asia, even in Canada and other countries. This is one of the main reasons why gold is rallying recently. This is one of the things that you have to know, that when inflation started to pick up, gold and silver will be on demand again. Also, we have the same day we have also the consumer price index on Wednesday or the inflation data from the States, which is likely to have a notable impact on the market, especially if it picks up notably. In addition to that, we have the Bank of Canada monetary policy meeting with all the decision and the estimates. For the time being, there's no change, but most likely to be in a dovish tone. Going forward to Thursday, which would be like our main day or the biggest day of the week, because we'll be waiting for the ECB interest rate decision. We don't expect that much thing in terms of changing in the rate decision, or the rate or deposit rate or the interest rate. But the most important thing that we'll be watching, if the ECB will decide to start tapering earlier than April, because of the figures that we've seen for the past few months, which is very important to watch. We'll be waiting for also a bunch of US data during that day. Despite that, don't focus on the US figures as much as you have to focus on the ECB monetary policy statement and press conference. This will overshadow all of the US data, especially if, again, as I said, if the ECB decided to start tapering earlier than April. Finally, on Friday, we have a lot of. First of all, we have the Fed chairwoman Janet Yellen will be speaking or due to speak at Stanford Institute of Economic Policy Research, which we'll be waiting if she will enforce again the idea of a rate hike or if a rate hike is alive in every meeting. But also, we will be watching for the Chinese data, retail sales, industrial production. In addition to that, we have the GDP data, which is very important to watch. In addition to that, we'll be waiting for the producer price index from Germany. Again, as I said, the PPI is also important to watch. Retail sales from the UK will be also very important to watch, especially the core is expected to rise by 0.4. 0.2%. The year-over-year 7.8 is expected to rise again. That's the core, which is very important to watch. And finally, we'll be watching for the retail sales and consumer price index from Canada, all the inflation data from Canada. And we have also at the end we have FOMC member Herker will be speaking. Now let's go and have a look at the some technicals today, and starting with our favorite, which is the euro. And as I said in the previous video, the daily on Thursday we had an uptick, a rally in the euro, and but we managed to close Thursday below the 50-day moving average. But the most important thing that Friday is the break above that level, which is very important. But at the same time, we have the 61.8% Fibonacci retracement from the recent decline, which stands at 106.80s almost. We need to watch this level very carefully, and if the ECB decided to taper earlier, I guess we'll be looking for another rally above 107.30s, 107.50s. So this is very briefly about the euro, but at the end of the day, as I said, the technical indicators have slightly overbought, sorry. So I would be interested for a slight retracement to the downside before going into any kind of long positions. Dollar yen, which is very important, the one that we spoke about in our previous video last week. 118.68 was a very solid resistance. At the same time, it represents a 74.4% Fibonacci retracement all the way back down below the 100-week moving average. It's a bearish engulfing candle on the weekly chart. Most of the technical indicators are turning negative, which is also another thing to consider, that buying the dollar yen right now is not a very wise decision maybe to make, at least until we see some sort of stabilization from the time being. The British pound, I'll be keeping an eye on this one very carefully in the next few days, especially for this week. For the time being, as I said before, we still have this support area holding very significantly and very strong. 120.90s is a very strong support to watch in the next few days, especially when the Prime Minister Theresa May will be speaking today. So this is very important also to watch, but still within the same range. I wouldn't be even touching it, at least until I see a clear breakthrough that support area 120.90s, 120.20s. Gold and silver. Silver managed also to close last week trading above the 50-day moving average, which is important, but we need at least another week to make sure that this is a real break out above the 50-day moving average. But at the same time, gold has made it clear above the 50-day moving average with some reversal candle on the daily chart, but this is very messy here for the past few days. But still, it's trending higher, it's still positive. At the same time, we need some sort of a retracement to the downside, which I believe that might happen in the next few days before going up all the way. Maybe we can test the $1,200 again. So this is one of the products that I'll be watching in the next few days, especially gold. And don't forget again, it's the week of the inflation week around the world. So further increase in inflation further improvement in inflation is likely to be very positive for gold and silver in the next few weeks. This is it for this week. Thank you for watching. If you have any suggestion and any questions, you can post it below the video on YouTube, and you can also follow us on our social media sites, Twitter, YouTube, and also even Orbex website. If you have any question, you can post it. Thank you for watching. I'll see you once again next week.